Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, we're going to talk about Las Vegas. We're going to talk about Nevada. We're going to talk about economic growth, real estate, and the whole thing. What's happening in Nevada and what's happening in Las Vegas is absolutely incredible right now, the economic growth. And we're going to talk about this with a slant on how this affects real estate.
Okay, well, can't I say that, recession is coming and gloom and doom and cats and dogs living together?
You could say all of that, but
Okay.
it's just not true.
Okay.
Because, look, everything is showing the opposite of that. And if there's a national recession, that's great, but we'll still be growing.
Okay.
So who cares honestly,
All right,
who
let's
cares?
go.
Okay, let's go. Okay, so we've got like 20 slides. You're going to have to be patient. We're going to power through all the slides. This is all very good data. A lot of this this is Census Bureau data. It's all at the bottom of the slide. It tells you where we got all the data from. So we're going to start with the first one. Now, this is a pre-COVID slide. This is population growth by state. In 2018 versus 2019, Nevada was the second growest fasting state in the universe. Okay? Of all the planets, of everything, including all the star systems and everything.
Okay.
Nevada was the second height. Only Idaho beat it by 0.1%.
Okay.
Nevada was number 2. And if you look at these states, you can see they're either southern or Sunbelt states. Idaho, Nevada, Arizona, Utah, South Carolina, Texas. These are like normal states that tend to have a lot of growth, right?
Right, but on no planet is Idaho a southern state.
No, but it was southern Idaho growing the most. Because the northern Idaho that touches Canada, there's nothing happening up there. It was the south part of Idaho that was growing. No, Idaho is just growing a lot because people were leaving California and Washington, just like they, have been.
Right.
All right, okay. All right, so that's the first one. Now, we found out how many people are moving to Las Vegas. This next slide is very fun. 8.2 residents move every hour of every day to Las Vegas.
Right.
That's a ton of people. That means we have to build how many houses? 8.2 people is probably 3 houses, right? Because that would maybe 8 people is probably 3 houses, right?
Even if we say it's 2 houses, that's still a lot of houses.
We have to build a new house every 30 minutes, including all night long. They have to unveil a new house. I have news for you. We do not produce that many new houses.
No.
Not even close. It's not even close.
No.
It's actually a very small number, the number of homes we produce here.
That's true.
In a year. You'd be shocked. Okay. Now, you're probably saying, well, how do we know this? Well, we know this because there's a bunch of data that they grab. And one of them is they knew people getting driver's license and they could tell where they were from. So if you moved here and you have a driver's license from another state and you now say I'm getting a driver's license, they can see you just had one issued 6 months ago in a different state. They know you just moved here.
Right. So what they're doing is they're tracking the driver's license surrender rates. That's what they're called.
It's not new. It's not like you're 16 and you're getting your license for the first time. It's you turning in a license. And there may be people who moved here with their parents who got a driver's license, but it's a new license. They don't count that.
Right. So we're just talking about people who are surrendering driver's licenses from other states, and they're getting a Nevada driver's license.
Okay. This shows the percentage of where they're coming from. As you can guess, 38.3% of them are from California.
So what I have to say about California, please continue to screw it up because that's what's fueling our growth.
Absolutely. Yeah. Whatever you're doing in California is working for Nevada.
That's right.
It's not working for California because they're all leaving.
And you're all coming here, whether you're coming to southern Nevada or northern Nevada, all Californians seem to think that Nevada is the place to be.
We do have, the other charts are mind-boggling.
Yes.
And this is all true data, but you'll see why the people are coming here. Okay, so that was a pretty fun slide. Okay, the next one. Employment growth of all 50 states from 2022 into this year, 2023, number 1. We were the number 1 state. Now, those other blue states did have employment growth. Florida, Texas. And now you're probably saying, wait, how's California blue? How did it have employment growth? It had employment growth because they had a lot of job losses because of people that left.
Right.
But they added the jobs back. That doesn't mean the people are in the state.
Right. So part of the reason why Nevada is number one is because Nevada was really hard hit during COVID because of the hospitality industry. So Nevada is still trying to catch up. We're still not completely recovered as far as the number of jobs in the hospitality industry from pre-COVID.
Okay. The next thing. Employment growth, January 2022 versus January 2023, the U.S. average was 3.3%. That was the growth of employment, right? So if there's 100 million jobs, there's 103.3 million jobs, right? That's all that says.
Right.
Now, the top 30 cities, some did better, some did worse. Here's the chart. Las Vegas, 6.3%, number one.
Woohoo!
And it's funny, if you look at these other ones, Dallas, they were a bunch of relo people, right? Austin, relo tech people specifically. Orlando and Tampa, also relo people, mostly from the Northeast, right? New York. Houston, Texas, relo and some tech. San Antonio, also relo and stuff. San Diego was an interesting one, but these were people that left LA and also left
Northern California.
Now, New York are probably going to surprise you, but New York had a ton of people leave that have come back into the city.
Right.
Because they felt it was unsafe. So these are the numbers. Las Vegas is actually kicking butt for employment growth. Okay. What do you want to do next? Oh, let's do this. This is you're probably saying, wait, Las Vegas had all that growth. Where was it? So where do you think most people think it was?
Well, I think most people think it was in hospitality.
Hospitality? So what is that?
That means the casinos.
Casinos.
The casinos, restaurants, tourist things.
Okay. So these are the net job growth by sector for Las Vegas. And if you see the word MSA, MSA is the stupidest phrase ever. It is known as a market service area. It is a dumb phrase that some government person made up to capture a geographical area that's not just defined by city limit. So when they say Las Vegas MSA, they mean everything that's reasonably around Las Vegas. So this would include Henderson, North Las Vegas. It's the whole little area.
Right.
Okay. It's an
Las
MSA.
Vegas Metro. Okay.
It's the metro area, but it's a market service area. They all use it. And I don't know why. Okay. Now, as you go down and look at these jobs, leisure hospitality, 25,000, professional business services. These are people to support the population that are coming here. So these are doctors, dentists, stuff like that. Construction, 8,000, education, government, other services, and you go down the line. Mining and logging is zero, but we don't really have mining and logging is outside of Las Vegas.
Right. So we do have a lot of mining in Las Vegas, in Nevada. Nevada's huge for mining, but not in Las Vegas.
Yeah, the nearest mine is north up what's the first city you go to, like when you're on your way to Death Valley?
Like Goldfield?
No. It's before that.
Tonopah?
No, it's way before that. I forgot the name of the damn thing. It's like when you go past Indian Springs, it's the first. Is it Beatty?
Beatty's the other way. Beatty's is historic California.
That's what it's not Beatty. I forgot what it's called. But there's a town up there that have a mine, like on the mountain. It sits right on the mountain. Anyway, so they have Tesla chargers there.
Yes. Well, okay. So the point is, our geography not so great.
Nevada's a huge state. You know what's funny? Nevada is like 4 times the size of the country of Jordan. It's a massive state. It's huge. We were somewhere, and they said, "Where do you live?" I said, "Nevada." And we were in Scotland, and I said, "Oh," and I said, "It's just one of 50 states." And I go, "But it's a big one." They go, "Really? How big is it?" And I did some math really quick. I was like, "It's twice the size of Scotland." It's like 2 times as big as all of Scotland. We're like, it's a huge state. Just our one little state is like bigger than your whole kind of country. Okay. So, but as you can see, this is a lot of jobs created, and all these jobs, where did the people come from for these jobs?
California!
They came from other places. They moved here.
Okay, but I'm making fun of California.
Yeah. Oh, it's easy to make. And if you add this up, it's like 60 or 70,000.
Okay.
Right? Because that's a good number. We're going to go over those numbers. The employment growth by sector, this is growth. Okay. Construction had the largest growth, which was reasonable but remember, with percentage numbers, you can have a bigger percentage if you had 10 jobs and then you have 11. You grew by 10%, right?
Right.
So construction had a lot of growth. Information had a lot of growth. That's an interesting one. Leisure hospitality, even though it was the largest number growth, it's a huge industry, but it still grew at 9%. As you go through down, you can see these. And of course, mining and logging, they even put it 0% because it didn't grow.
Because we don't have it in Clark County.
We don't really have any here. Okay, this was businesses that left California. Now, in this one, they broke it out by actual cities. So if you look at this, the top 10 destinations for places they left, one was Las Vegas. 2,800 businesses left California for Vegas. Some went to New York, some went to Reno, Phoenix, blah, blah. Henderson was listed because this isn't MSA anymore, because they can actually tell exactly what city they move their license or whatever to.
Right.
So 2 of the top 10 are basically Vegas.
Right.
Henderson is a suburb of Las Vegas. It's like Las Vegas light. It's like not as fun as Las Vegas. Okay. And it's funny because when they show the crime stats, Las Vegas always shows up in like the top. Oh, Henderson is one of the safest cities in the whole planet, right? But it's misleading. Remember, there's no downtown Henderson because all of Vegas is basically the whole area is run from Las Vegas. So all of the stuff that generally is associated with crime is happening in Las Vegas. Well, Henderson is literally just a suburb that doesn't have a downtown. If you don't have a downtown, you don't have crime. That's the bottom line.
Right.
So I thought that was interesting.
So because Henderson is basically residential. So
right. It's residential. Okay. State Business Tax Climate Index. These were top 10 and 10 worst states. For business tax climate, Nevada was 7.
So we're pretty good.
Yeah. What was interesting is Florida was 4. We know that's a fantastic state. Okay. Certainly one of the 3 states that won't have a recession. Wyoming, no one would want to live there. But actually, I did find out that there's one place, there's 2, Wyoming and Montana are in here. And I think it's, what's the capital? What's Montana? It's not Helena. There's a big town in Montana that's like where the big airport is, where a lot of the like celebrities have like ranches outside the city. But the city is becoming like a mini tech hub, and they have all these businesses going there. So Montana, I think, is an interesting state. And then New Hampshire, and I don't know why, but I think it's just people that left Boston. Okay, but you saw Nevada's on here as number 7. And then you see all the worst states over there: New York, New Jersey, California is one of the worst ones. Connecticut, Maryland, and all the other states. Hawaii, of course, too. 10 worst states. Okay. Best states for new corporate investment. Which would you guess would be number 1?
Us.
Nevada. Okay. This is just among Western states.
Right. So part of the reason why Nevada scores really high on all these business questionnaire things is because it's super easy to start a business in Nevada.
Yeah.
It doesn't take much money. The filing is super easy. Most of it's online. So that's part of the reason why Nevada is so business friendly to start a business.
Yeah. So as you can see, Nevada is the best state on the West Coast of all the Western states. It didn't include other states, but maybe Florida's better, but I don't think it is.
Okay.
We're better. We're better in Florida. Okay. Cost of living rankings. This is the basically the largest metro areas on the West Coast. Unfortunately, Las Vegas is on the bottom of the list. But that's good because the top of the list is the most expensive.
Right. So if you look at it, the basis is Las Vegas at 100, and anything over 100 means that it's a higher cost of living. Anything below 100 is a lower cost of living. But in this case, we're looking at everybody around us being a higher cost of living.
Now, what's interesting is there's 2 indices on here. The composite index, which is the overall index for cost of living, and then the housing index, which is just for housing. This is what home prices are, what rents are, the whole thing. And you can see even Phoenix, every place, especially California, and all the coastal cities are all super expensive compared to us. Super cheap to live here. Actually, no, for sure. I've heard one of the reasons why Zappos came here, when Tony Hsieh gave his people the ability to vote, when Zappos, he gave them 4 cities. He said, we're going to move from one of these 4 cities. I'm going to let you guys pick. And they picked Vegas. 2 reasons. One is they'd all be able to buy a house. They were all living in the Bay Area, and they said, if we go to Vegas, we can all buy houses. The second reason was it's fun. There was stuff to do. And so they moved. That's the story. That's how they moved here. Okay. All right. Average weekly wages. This goes all the way back to 2000. It's up. Average weekly wages is $1,164 a week. You can see it's doing very well.
So if you're looking at it, on an annual income basis, that's about $60,000. So while $60,000 is not, $1 million, $60,000 is not that bad.
Okay.
Especially when you consider affordability.
This is my favorite one. This slide is called negative equity. Now, it doesn't have the first quarter of 23 because it's not over yet, but I think we all know the answer. As you can see, if you go back to 2010, 70% of Nevada had negative equity in their home. It's 1.1%. That means 99% of all people have positive equity in their home. So this is your chance of foreclosure. If you look over to the left where you see the big, tall blue bars, high chance of foreclosure. If you look all the way over to the right with little bitty, can't even see them, they're so small. You got to get the magnifying glass out and look at them. Zero, this is the thing they're saying is trigger all the foreclosures. When you see this, you're like, what foreclosures? Like, where are they going to come from? Everyone's got equity. This is not and remember, this only goes to 10. If you go back even further, it gets worse. Because I think in 2008, the state as a whole had $25 billion of negative equity. Remember that?
Yes.
The state of Nevada had $25 billion. And now we have billions and billions of positive equity.
Right.
In the whole state. Okay. All right. The next one is, now this is going to surprise you. I'm going to put this up here. This is the new home median closing price. Now, a lot of you are going to say, yeah, but it's crashed when we get to 2023. That's actually not the case. That number, that 504 number you see, first of all, the bars on the left only show full year. So that just shows the full year 08, 9, 10, and you can see it climb back up, 21, down a little in 22. But then when you see that 504, 683, that's actually right now. What if I told you, okay, so we're going to play a game, Oana. New homes, not resale. Forget resale because everyone's focused on peak to trough, peak to trough. Right now, the median closing price of a new home is 504. A year ago today, if you guys were going to guess, what would you think it is? And they're all going to say, oh, it must have been way more than that. Do you know what it was?
I'm going to take a swag at 484.
450. It's up 12%.
Nice.
12%. While all the resale homes are down a bit, Redfin says Las Vegas is down year over year 3% for price per square foot. 3% for price per square foot. According to Redfin, if you believe Redfin, it's in there. If you click on Redfin, you find the market data, it says that in there. Okay. It's up. This is crazy. Las Vegas, the prices of new homes are up. This theory that there's all these foreclosures getting ready to happen, the homes have all been purchased. They're all closed. They either got sold in the MLS or the ones that fell out just got repurchased. There are no massive thousands of foreclosures getting ready to, or whatever, that new home builders are going to dump on the market. It's not happening. Median new home prices up. This is tracked by a local company that tracks all the new homes. Remember their name? Sales Track.
There you go.
Sales Track tracks all this. They just provide this data. That's where the data comes from.
Okay.
That's counterintuitive. Why is that?
It is because, all we've heard for the last, 6-8 months is all about, the new home builders are hurting. They're slashing prices all over the place. They're giving homes away. They can't give homes away, that sort of thing. And this clearly shows something a little bit different than that. If we're having prices be up from last year, then clearly that paints a different picture. It paints a picture of a very healthy new home market. And it paints a picture that real estate, at least for the time being, is pretty solid.
I think it's pretty solid. Okay, this next one, apartment vacancy rate. As you can see, it's being lower on this is good because if you have a lot of vacancies, then it tends to push prices down. But 2.7% super low because that's actually below the normal. The normal rate of vacancies should be around 5% because that's normal people going in and out. But this is tight. This is literally someone moves out, somebody's already on a waiting list to get in.
Right. And, this is very surprising to people who live around Las Vegas because, as you drive around the Beltway or wherever you're driving throughout town, you're seeing lots of apartment buildings being put up and you're thinking, where are they going to get these people from? But if you go about 10 slides back, remember those 8.2 people moving in?
Every hour?
Every hour, that's where they're getting these people from.
Yeah, they're moving in. One of the imbalances we have here is we have a good amount of rate of building for apartments. It's keeping up with people. We don't have the home builders. So we have a shortage of single family homes. We're significantly short of single family homes. And the vacancy rate of single family homes is actually lower than this, substantially lower. Okay, the next side of that equation, apartment asking rent per unit.
Right.
It's the highest it's ever been.
It is, and it's what, like $1,500?
$1,500.
Right. So at $1,500, two things to keep in mind. First of all, remember that we're putting up all these new apartment buildings. These are nice apartment buildings. The asking price is $1,500. That's a good bit of money. If you're comparing that to how much people are paying in mortgage payments, now you're thinking, well, it makes more sense to stay in a house than it does in an apartment because your mortgage payment is probably quite possibly less than the $1,500 a month. Plus, you're getting the tax break. Even if the mortgage payment is $2,000 a month, by the time you get your tax break and you're putting money against your principal, you're actually paying less than you would be paying in rent. So this is why we've been kind of on this talking point of saying, well, even if you get into financial trouble, it's unlikely you're going to sell the house and go out and rent because renting is going to be so much more money.
Are you saying now is a good time to buy a house?
I am not saying now is a good time to buy a house.
Okay. But I want to point this out. 2019, if you go back to 2019, that's where it broke $1,100, right?
Yes.
You could have bought a house, a median home in Las Vegas in 2019, put 3.5% down, got an FHA loan, and your payment would have been less than $1,500.
Right.
And so, but there are some people, I can't afford that. I can only afford $1,100. I'll just go rent an apartment. But if you'd have just paid $1,500, you would still be paying $1,500 or less, and you'd own a house, and you probably have $100,000 of equity.
Right.
Yeah, and you wouldn't be, who knows when it's, because the next thing is it's going to be $1,600 at some point.
Yep.
Okay. Yeah. All right. Okay. Another major indicator is how retail, industrial, and office space is doing.
So this is really important because, of course, because of COVID, a lot of people did the work from home thing. And so a lot of retail office space was left to the ghosts, so to speak, because there was nobody there. But, we can see from this chart that they're actually basically fully occupied. And again, if you drive around the Beltway, you're seeing all kinds of new office buildings going up and you're thinking, who's going to fill them? But according to these numbers, there is certainly a demand for office space because the vacancy rate is really low. I mean,
yeah, look, industrial in a decade ago was 16.3% vacancy rate, 3.9%. It's full. That's unheard of. Retail 10.8 to 6.2, office 24 to 15. That's super low. This is, if you were showing this to somebody, they would say, wow, wherever you are must be really a hopping place. It must be kicking butt. And it's it's Vegas.
Vegas, baby.
Here's another thing. Las Vegas makes most of its money from tourism, also known as hospitality. All the way on the left, we have the passenger counts at the Vegas airport. Of course, that little bitty 2020 was COVID. It took a couple years to rebound, but we have 54 million. We're on pace to have 54 million employments in 2023, which are coming here, deplanements. Average daily room rates are 174, the highest they've ever been, ever. Gaming revenue, 13 billion, the highest ever been. Actually, there was 21 and 22, they set records quarter after quarter for gaming. Remember that? They were having each company was doing over $1 billion in gaming per quarter, and they were setting records that they never had that much gaming revenue before.
Right. So something to keep in mind about gaming. Gaming is one of these industries that is counterintuitive. So the reason that gaming was doing so well during the pandemic, once the casinos opened back up, is because people are optimistic, or however you want to define their frame of mind. But when things are tough, people gamble. And you see that, when with the pandemic, we saw that with gaming revenues. We see that during recessions. During recessions, gaming tends to do well because people are optimistic. People want to take a chance, however you want to think about it. But that's something that we see time and time again in the gaming industry.
Another thing that Vegas has in 2023, 600 plus scheduled events. So what defined a scheduled event?
Taylor Swift, all these entertainers that come to town. Plus, you have the Golden Knights, and you have the Raiders, and you have the March Madness, and you have all these different events. So each one of these...
Formula One racing.
Well, Formula One racing. You have all of these events that count toward the 600 plus events.
So it's any major event. So it could be a convention would count as an event. A major concert would count as an event. NASCAR out at the Speedway would be an event.
Right.
Golden Knights game in town, a Raiders game, because it brings people in.
Right.
Right. And then you've got the picture up right now of the Formula One racing.
Right.
That you can see they're going to basically build it almost. I don't know. Some of those stilts may go into the water, but it's literally built.
Yeah.
On the strip. It's on the strip. I mean, it's right on the strip. The Formula One track's going to block a lot of the strip.
So if you're coming to Vegas this week, we do not look like this right now. Okay.
Yeah, this is an artist's rendering of the Formula One. 30 billion plus of construction is planned.
Right. So this is what's planned, and we acknowledge not all of this will get built. Okay. So we're very aware of that.
It might only be 29 billion, right? Or 29 and a half.
Right. So, Vegas loves to plan for things, and we love to plan big, and we love to plan exciting things. So there are lots of new projects that are on the drawing board. How many of them will actually come to fruition? Obviously, none of us know, but a lot of them will. And certainly the ones that are committed long-term, such as the race down the strip, and we've got the Super Bowl coming up, and
next year we have the Super Bowl.
Right. We've got lots of events that absolutely will happen. So we have all these events that are pretty much set in stone. Like I said, we've got the Grand Prix that is booked for 10 years. We have, the Super Bowl that is hard booked. We have other things that are hard booked, and those will bring jobs.
Conference championships.
Right. And those will bring jobs, and those will bring businesses and that sort of thing. And those are pretty much set in stone. Not every casino, not every hotel that is on the drawing board will get built. I personally am hoping for the Hard Rock one to get built because I saw
guitar.
The guitar. I saw the mock-up and I thought that would be fabulous. But so we have lots of projects that we have lots of wish projects, if you will, and then we have lots of projects that really will get built.
There's also, as you know, we have a hockey team. We have a football team. Mm-hmm. They just got a new quarterback, I think.
Yes, and we're still working on getting a major league baseball baseball team.
Yep.
And we're working on getting an NBA team.
An NBA team, and maybe a soccer
team. So all of these things are in Vegas's future. It's not a matter of if with these things, it's a matter of when. We are at that tipping point where Vegas can support these things. But keep in mind that the more of these things we actually get, the more of these projects that are billions of dollars worth will actually be built, because we will need these projects in order to accommodate all these new businesses like an NBA team, like a baseball team and that sort of thing. All of these require a lot of support, and that requires a lot of new projects and a lot of new businesses.
The thing that's really surprised me is that Las Vegas hasn't gotten a bunch of the esports national champion, like the championships here. Well, because they're ending up in weird places like Seattle or Singapore, places like that.
Right.
And Vegas is a perfect place for that. It's a perfect place for esports and things like that. We have space for it. Like we have a convention space for it and facilities for things like that. So,
I think part of that is the leadership for the Convention Authority. They are of a generation, as I like to say, that is not quite in tune with that, and they haven't quite figured that out. But I think that as that leadership starts to change over to new and younger leadership, I think that you'll see some of those esports find a home in Las Vegas.
So you're saying they voted for Roosevelt,
Basically, yeah.
but it was Teddy Roosevelt,
Yes.
right?
Yes.
Yeah. So here, this is why we kind of gave you all this information. And as you're saying, well, what about real estate? Okay. You've been told that there's all these foreclosures coming. We just showed the day there's no foreclosures. Everyone has equity. We have negative. We have very few people have negative equity, right? Then we showed you that that there's people moving here like crazy, 8.2 people every hour, right? That's why. So all these things that you're hearing, it's not like we have a static amount of people that, if we get too many houses built or whatever, it crashes the market or something. It's just not happening. Are homes less affordable than they were a year ago? Yeah. Are they less affordable than 2, 3, 4, 5 years ago? Yeah. But 5 years ago, they were less affordable than 6 years ago. And 6 years ago, they were less affordable than 7 years ago. So, but when you look at where else are homes unaffordable, LA, San Francisco, San Diego, Seattle, Boise, Phoenix, Salt Lake City, right? Every place else on the West Coast is unaffordable. Literally the most affordable major city. You have to go out to we're probably more affordable than St. George. And it's not even a major city. Right. Right? It's probably more expensive there.
It is. St. George is expensive.
St. George is super expensive, right? So all these things are these huge economic forces that are the reason why Las Vegas has had so much growth. So, this idea that we would have a 2008 like housing crash with, first of all, we didn't have the overbuilding. We don't have the everybody's upside down that we had before. We don't have the crazy adjustable rate loans. Most houses are owned by cash. It's like, yeah, prices went down, big deal. So who cares? I mean, I will take 100 years of prices going up 22% and then down, 5 to 8%. I'll take that every day.
Right.
That's a winner.
Yeah. And then for those of you that are saying, yes, but you're going to run out of water and you can't accommodate all those people, you have an excellent point. There are two things to keep in mind. One, Lake Mead is here for us to suck water out of. And when or if there is not enough water to go downstream to our neighbors, we're so sorry, but we are still sucking water out of Lake Mead, and you're past the intake. You guys can't have any water. So sorry. Second of all, we are so big on conservation here in Southern Nevada that during the current legislative session, they are in session right now, and God bless them, they're making all kinds of new laws. So what they're working on right now is they're working on on recycling even more water. Right now we recycle something like 98% of our indoor water. They're looking at recycling even more than that, actually possibly even more than 100%. And you say, how can that be? I'll tell you how that can be. What they're looking at is people who are on septic and they are within 400 feet of a sewer line. They are going to have to get connected to the sewer line, so everything that goes through the house will go out the sewer line and eventually out to Lake Mead. So that means that even if you are on a well, that could still pertain to you. So that's why we're looking at possibly more than 100%. So we'll see how that pans out. That is a very expensive proposition. They are looking at having government subsidy for that, of course. Right. They're looking at not making that happen overnight, but over a certain number of years and that sort of thing. But the point of that is that we are very aware of our water usage, and we are managing our water resources probably the best in the country, if not, possibly even the best in the world. We have people from all over the world coming here to Las Vegas to see how we manage our water resources because we do such a good job.
It's something else to keep in mind. Let's say we get down to where it can't go downstream anymore. And people said, yeah, it'll go down to the bottom. If that happens, two things. We, as Nevada, the whole state, only takes 2% of the water from the Colorado River Basin. Most of the water in that lake is either goes to Arizona downstream, California downstream, or Mexico, all downstream. 75% of that water that goes is for farming. The rest goes for people. If it stops, the amount of the lake far exceeds what we can use. It's far in excess. Our intake is way below where the water can't run downstream. So we could keep sucking it out. The other thing is, because we return so much, the water, the lake would hit the bottom, but then it would sort of creep up again until it got to where it would go downstream, then it would stop. It would sort of get caught in that no man's land. Because remember, the water's coming in the lake not as fast as you're using it downstream, but way faster than we can use it. We will literally never run out of water. We cannot run out of water. It's almost not, the lake can't just go dry. It just gets to a point where only we can use it. And when it gets to the point, it's still 8 to 12% of the lake is usable, and of the Colorado River Basin. We only use 2% of it anyway.
Right.
And we're returning that 2%. When we say we return it, it goes through sewer, it goes to the water treatment, and they just dump it right back into the lake.
Right.
The treated water goes back in the lake.
Right.
We have water. We're not going to run out of water. It's not going to happen.
Right. So, did you think it was interesting? We had a really good time putting all these slides together.
I spent days
yes.
and months to put these slides together.
And I know I was like a little hopped up.
We have a team of 12 people that sit in the offices and do nothing but put slides together for our videos.
Right. Okay.
Absolutely.
Yes. And I'm a little hopped up on chocolate, but it's all good. So, did you have a good time with us? Please say yes. Please like the video, subscribe, hit the notification bell, share the video, leave us some comments, and be nice to each other in the comments, of course. And we'll see you on the next video. Bye.
Bye.